Hello traders, we're back for another market recap. Today is Wednesday, March 5. What we're looking at is the daily chart of the SPY. In this zone here between 575 and 571 was where we said the SPY could bounce today. If you go back and look at yesterday's recap video, that's when we talked about it. Essentially, they got down to there on Tuesday and it was a good place to launch from. So they opened above this, fell down right almost exactly in the middle of it. It was 573.08 and came out of there pretty much for the rest of the day. So where they closed isn't really anything spectacular. There really aren't any other signals that might indicate they're going to go a whole lot higher. I mean, they could. Anything can happen. If we look at something like this hourly chart here, there's something here to look at. There's a breakdown candle. This was on Tuesday. This is the last hour of the day. They've been coming up to the top of this. Maybe a little easier to see in a half-hour candle. And also the timing looks about right here. So essentially kind of a bearish consolidation where price would fall down from this area. What I'm seeing here, call around 584. At least at this moment in time, price would have to get above, like say on this 30-minute chart or maybe an hourly chart, to go a little higher. If we go back to the daily chart, and let's say they do fall down and get down below this zone, we talked about another zone down here. Just a little quick peek here on the weekly chart since tomorrow's Thursday, and then we have Friday. The week's going to end. So here is the 50-period moving average, which the weekly chart has not hit in quite a while, back in October of 2023. So could this be a target if they want to continue to go farther down? Or is this zone here what was needed for the bulls to stage a rally? They really didn't stage a rally today. Wouldn't call it much of a rally, but it was an up day, and we said that would probably happen. In fact, let's look at the game plan right now. This is what was sent out. Here are the levels. It was 8:57 a.m. You can read through this. Talked about, well, I mentioned last night's video, the possibility of price bouncing from where they are. Not out of the question. The way things looked in the morning, it wasn't as promising as I was hoping. But like I said, the timing was on the bull side. And so basically above 579.80, this would be a good place for the bulls to stage a rally. And below that, we saw a bunch of closes below that. Then price could get pushed down more. And so what happened? So then what happened with those areas? Well, here's 579.80. So initially they were below. So things kind of looked weak. They bounced off this level we had here. Once they got above 579.80, it was bullish. So overall, it was an up day, as you know. They opened down here, meandered around, and closed up here. So positive on the day. And in the meantime, these three levels that were hit, it should be pretty clear to see how they worked out. And they get close to 579.80, and we're going to pull this down to 579.75, assuming they get there. That would be our trigger point. So the highest they got here around 10 o'clock or so, 10:09 a.m., was 579.64. That's 11 cents away from the level. So if it's 10 cents away or less and pulls away really fast, like within a minute or two to a base hit, then that's a near miss by definition. It's what I call a near miss. I'm not going to take the trade again, in this case, on the short side. Well, that's 11 cents. So it's just 1 penny. So something to think about. There was a reaction there, and let's just keep this in mind for later. But meanwhile, let's talk about what they did at 574. I don't even need to adjust this level. It's pretty easy to see that 574, 574.5, wherever you would have gone long, that was a 10-point bounce right off the bat. And then later, obviously, they went a lot higher. So there's one official base hit of 4 points, hopefully more if you traded this because of the way the market was moving. And then over here at 579.75, here's where your profit target would have been. You would have wanted the E-minis to give you 4 points. So here's your 4 points in the E-minis. On the other side of that, we have something called a fumble threshold. So here's the equivalent in the SPY. And I'll make this red. What we don't want to happen is certain things to happen on the other side of this fumble threshold. And price got above it. And, maybe 10 points or more. However, there were no rules violated, so just patience was needed. And at 1:08 p.m., 13:08, they fell hard, and there's your 4 points, and then some. They kept going down. So that is an official trade right there. Base hit number 2. And then up here at 584.88, this was the bottom of a pretty large zone we had. Well, look what they did. They went up to 584.88 and pulled away. Even this little bit right here is a 4-point base hit. Pretty quick. So these are pretty precise trades. This one just took some patience, but they were 3 legitimate trades if you were playing by the rules. I didn't even look at the market until sometime after 1. It was like 1:30 or so. I was extremely busy all morning, so no trades for me. And it even occurred to me later that even if I were to take a trade, I'm thinking of not recording the trade. I'm still kind of toying with this idea just to buy me some time in the evening, because if that's one less thing to edit, put into the recap videos, then that would save me some time. You would just have to take my word for it. And really, that's the reason I like to record my trades, so I can actually show them to you, transparency. But anyway, there was no recording today, and I missed some good opportunities, but it just kind of came with the territory because of what was going on at the office today. If we jump over to the tracking logs, here's the first one. Very simple, 3 base hits, that's 12 points. That's 4 points each. And here's where you would have landed with however many contracts you were trading. We got close to 50% rate of return so far for the year, but we've pulled away from that because this week hasn't been great so far. But, we got a little bit of a gain today, so that's pretty good. And then over on the Sam's Trades log, nothing for me today, no trades. And you can see where the rate of return is, assuming a 2 contract trade per level each day. So really, that's what I have for today. I wanted to make the video quick. Looks like I succeeded. And I'm thinking about revamping the format a little bit just to buy myself some time and hopefully still provide the value that you're used to, primarily the near-term analysis of where the market might be going, as well as tracking every single trade at every single level, which I hope you'll agree lends credence to the effectiveness of this strategy. So thanks for watching. Hope you learned something and found some value in today's recap. And tomorrow morning, I'll put out another game plan and new levels, and hopefully we can speak with a little more authority about what they might be doing on Thursday and the rest of this week for that matter. I'll talk to you again soon in the next video. Have a great day.